Coming up in this episode, the market rips higher again, the NASDAQ on track for its 8th winning week, retail sales rise in May, Microsoft hits an all-time high, BlackRock files for a Bitcoin ETF, European Central Bank hikes rates, China cuts another rate, and we go into a big quad witching and rebalancing day tomorrow. Welcome back to Click Capital, everybody, and what an interesting time in the markets we have this week, as we've got stocks ripping higher again, and we can see that in the chart at the SP500 now up to 44.25. And we can see that in the heat map today. Quite a bit of bullish breadth across the board, with healthcare stocks bouncing back after they got slammed yesterday, and most other sectors green as well, except the semis, which diverged from the rest of the market today and actually came off a little bit. And what else may have helped the market today was retail sales came in a bit better than expected. We're expecting a 0.2% decline month over month. We actually got a 0.3% increase. However, looking at other economic data we got out today, the initial jobless claims actually came in a bit higher than expected at 262,000, and there's the retail sales there at 0.3%. And the second biggest company in the world, Microsoft, just got a little bit bigger today. After JP Morgan, analysts raised their price target, and executives predict they could hit 10 billion in annual AI revenue soon. And there's a look at the daily chart of Microsoft, and pretty bullish price action here, above average volume on a big white Marubozu candle, finishing up near its highs. I did take a short position in this stock a couple of days ago, as I thought we may have hit a top. However, I closed it this morning as we climbed above 340 and took a small loss on it, as I now think this potential reversal candle has been invalidated with this big strong move up above it. And so the market is clearly now in a hyperbolic overdrive, and it's just hard to say how high and crazy this thing can go, along with the rest of tech as well. We did see a pullback in NVDA today, but to give you some context of how crazy these moves have been recently, for example, in NVDA yesterday we added almost 20 points to the stock price, which is about 50 billion in market cap, and that's almost twice their previous year revenue. So just in one day they added market cap about double their annual revenue. Same story with the smaller AI stocks like C3 AI. Yesterday it added about 400 million in market cap, and again that's almost twice their annual revenue last year, and this is a company that's increasing its losses. But however, as you can see in the price action, who knows how far and how crazy this thing can get. Markets can do really crazy things in the short term, as sentiment and liquidity drives prices in the short term, so this thing could keep running up well and truly higher. I think it's significantly overbought and eventually will crumble. However, I would not be taking a short in this one, as it's way too risky, and I think it's risky for the longs as well, trying to ride up a bubble. But it certainly is interesting to watch all this unfold, that's for sure. Something that did catch me by surprise today was BlackRock filing for a Bitcoin ETF with Coinbase as the custodian. And again, just another mixed message from the industry, because BlackRock filed an application with the SEC, which just came out against the crypto industry, opening lawsuits against Binance and Coinbase. And one would assume the largest asset manager in the world, BlackRock, if they're going to file with the SEC to open a Bitcoin ETF, you would presume that they already know that it's going to go through, otherwise they wouldn't waste their time and reputation trying to get it done. So for all intents and purposes, they could very well get this done. And for my regular viewers of the channel, you know I'd been short Coinbase. I got short a couple of weeks ago at $62 a share back here. And as soon as this news hit, we just got it after hours, just not too long ago after I've started making this video. I closed my short position at 54.72, as this totally caught me by surprise. And like I said, if BlackRock are going to file an application to have a Bitcoin ETF with Coinbase as a custodian, I would say they're most likely going to get it done. And it's just weird because it flies directly in the face of what the SEC is doing and trying to shut down Coinbase by alleging they're operating an illegal exchange. So once again, the crypto industry is just so hard to read and messy, and I'm just glad that I got to get it out of the short trade with a profit, as this news instantly changed my opinion on Coinbase. I'm not bullish on it, but I'm no longer bearish on it. I have no idea now what's going to happen because BlackRock are kind of stepping in and partnering with them. So you got to adapt to the evolving news and situation in a trade, and this is a significant piece of news for me, which changes my original thesis on the trade. However, I'm still sticking with my short in Royal Caribbean Cruises, and for my regular viewers, my latest indicator rangefinder, I just updated the name today to Swing Oscillator, which I think was a bit more of an appropriate name. And we can see here on the weekly chart, the Swing Oscillator is at a huge 17. In other news out today, the European Central Bank increased their interest rate to the highest level in 22 years, and they also boosted their outlook for inflation in 23, 24, and 25. And remember, just a few days ago, as they revised down their Q1 numbers, the Eurozone is actually already in a technical recession, and they're still increasing rates. And so it looks like the Eurozone is moving into that stagflation scenario, where economic growth stagnates and they've still got sticky high inflation. And looking throughout market history, that is typically not good for market risk assets. Other news out today, China is scrambling to support their economy and cut another rate today today. That's on the back of their cut in their short-term rate to 1.9% earlier this week. This time they cut rates on their medium-term policy loans, and that's because their economy is stalling. And they're probably also going to come out with a big stimulus package soon, on top of the lower rates, to really try and get their economy going again. And tomorrow could be an interesting one with quadruple witching. We've got quarterly options expiring on the index, futures, stocks. On top of that, because it's the end of the quarter and half year, big funds would be doing their rebalancing. And because stocks have gone up so much, a lot of big funds like risk parity funds, tactical asset allocation, they'll do their balancing based on the differential in yields between bonds and stocks. And since stocks have gone up so much, they're likely to sell stocks and buy more bonds to rebalance their huge portfolios. And like JP Morgan says, that could mean about $150 billion in sales from stocks. And we've still got the bond market signaling that the Fed will put the economy into a recession. And we can see that in the long-term chart of the yield curve. That's the US 10-year yield minus the US 2-year yield, coming back down to all-time lows and really deep inversion territory. And just jumping back down to the daily chart, and that yield curve is getting real deep, and that's because the Fed's sensitive 2-year bond yield is holding up a lot better than the 10-year yield. And that price action indicates that the bond market thinks rates are going higher in the short term, but they need to go lower in the long term because we're going to have weaker economic growth looking out into the future and a likely recession. And so while the stock market is getting really excited at the possibility that the Fed is done, they're going to go on permanent pause, and inflation will continue its downtrend, the Fed Fund futures market is still pricing in 64% chance they will hike rates in July. But that's not stopping the stock market getting excited as it has been in a couple of years, with the Fear and Greed Index now at 81. And the AAPL Investor Sentiment Survey ticking up to the highest level in a couple of years as well, with bullish votes at 45%. And a huge day in the options market, 48.2 million contracts traded, and a whopping 60% of them were calls. And I can just imagine what this number will be tomorrow. We'll probably see in excess of 50 million contracts traded tomorrow, maybe 55, even towards 60, and what should be a huge day. And once again, just look at those low put percentages up the top here, with most of them in the 30s, so people just piling into the calls on the big guys. But the dark pool buyers are pulling it back again. We've got a 48% reading on the DIX index. And corporate insiders as well, taking advantage of these elevated prices, almost selling 4-to-1 in sales to purchases yesterday. And we've now got equity risk premium at the lowest level in over a decade. And that's the SP500 earnings yield minus the 2-year Treasury bond yield. And so for much of this bull market over the last decade or so, you could earn a much higher premium being invested in stocks versus bonds, which were at all-time lows. And one of the biggest drivers of the bull market was that differential. However, that premium's all but evaporated now, and you can actually earn a higher return in short-term bonds versus stocks. And that could add to a big rebalancing in those portfolios tomorrow and going into the next couple of weeks. However, all that doesn't matter right now because the market is totally jacked up on this AI craze, and we can just see that in the price action of the Qs just ripping higher here into super overbought territory, and on track to do the 8 consecutive weekly higher close in quite a few years, and coming up to this resistance zone where we last topped out in March last year. And the rest of the market has been playing a bit of a catch up over the last week or so as well. Here's the SP 500 equal weight, now also into overbought territory, and the NASDAQ 100 equal weight ripping up as well. Even the Dow put in a good performance today, along with mid caps and the Russell. They're all up at the top of their ranges here after we've been going sideways for quite some time now. International stock indices have found their footing, and we've now got the China 50 index back above its 50-day VWAP. And an interesting dynamic in volatility land today. So we had a pretty good rip up in the market across the board, except for semis. Got that really strong price action in SP500. And typically when stocks go up, volatility in the VIX go down, the kind of inverse relationship. However, today we've got VIX increasing, especially up the front. And it's still in a normal contango structure from the 9-day onwards, and that's when you've got out the back still higher than up the front. However, when that moves into backwardation, when you've got up the front higher than out the back, that means the market is just about to crash or it's going into a crash. So now we've got the VIX 1 day higher than the 9-day, and look at those moves up today, with the 9-day moving up 6.8% and the normal VIX 30-day moving up 4.4%. Still really low here at 14.4. However, this price action here in the S&P 500 starting to remind me of back in January 2018 where we saw a similar thing. With the market on a strong rip coming out of a low VIX, then all of a sudden the VIX started turning up. And so I'll just take you back on the chart to that period. And here we are in late January 2018 on the S&P 500. You can see we went into this strong parabolic move. And I've just overlaid the VIX index and the orange line on the chart here. And when you look up over here, you can see what the VIX value as I hover over each day. So you can see the VIX was really low back then, 11, got up to 12. However, as the market was climbing, so was the VIX, and basically what that is the option dealers are pricing in the correction, and so they're increasing the amount of premium they have to take in to sell those contracts to compensate for their upcoming risk in the correction. And we can see right as the market peaked out, the VIX climbed significantly in percentage terms, and it turned out those option dealers were right, because look what happened to the S&P 500 over the next week and a half. It had quite the vicious sell-off, falling over 10% in short order, and the VIX shot up itself to over 37. So just back to the VIX daily chart here today, and although it's really small, this could be the start of the options market starting to price in the upcoming correction, because the higher stocks rip in this hyperbolic move in the short term, the more and more likely we are going to have that sharp and nasty correction. And that's because the market just gets so cornered, and when it becomes cornered like that and retail sentiment is very heavy on one side, it just becomes very vulnerable and exploitable by the big guys. And so if they can force that move down and force everyone to cough up their longs, hit their stops, then they get that extension of the move, that uncoiling, that unwinding in the market. And that's how come the crowd is mostly wrong most of the time. So we were watching this VIX creep up, and I'll be looking for some more backwardation up the front. We've already got the 1 day above the 9 day. We'll be looking for that 9 day to go above the normal VIX 30 day. For more signs that's happening. However, as it stands, the market could keep rallying for, who knows, a few more days, another week or two. It's hard to say exactly when it will topple over. And short-term breadth is getting pretty elevated here, 88% of stocks above their 20-day average. Although the amount of stocks on the NASDAQ making new highs couldn't break out, only at 72 here today. And the growth versus defensive sectors had a little bit of a pullback here today. And small caps versus large caps right back down, sitting at their 50. And with rates coming off a bit today, we've got a bit of a bounce up in TLT to back above its 50. And the dollar had a bit more of a dive today, back down to 101.7. That helped Bitcoin find its footing, and I would have thought that news we just got out with BlackRock trying to launch the first ever Bitcoin ETF in the market in partnership with Coinbase. I would have thought we would have seen a bit more of a rip up in Bitcoin than that. However, it has been weak and a bit of a short-term downtrend these last couple of weeks. So it'll be interesting to see what happens with Bitcoin and Coinbase and regular trading tomorrow. But like I said, I'm out of that short Coinbase trade on the back of that news. Weaker dollar really helps assets priced in dollars like commodities. That's why we got that big move up today in the commodity complex, more than 2% on volume. And that was on the back of a bounce up in crude just under its 50 here, after we bounced again from those mid-60 levels that I've been talking about. Got another breakout today in agricultural commodities as they continue their uptrend. There's the AI ETF bot continuing to rip in this melt up pattern. However, semiconductor chip stocks didn't join in the party today, doing a little bit of an inside pattern. A little bit of a move up in the retail ETF today on the back of those retail sales coming in stronger than expected. Financial ETF XLF found new multi-month highs. Another big move up in the transports today into overbought levels. And a little bit different today as we saw the defensive sectors, healthcare, staples, and utilities have some pretty good moves up. As like the volatility market, there may be some repositioning occurring, getting ready for the inevitable correction pullback we're going to see after this hyperbolic run. Pretty strong price action in BlackRock here today. And JP Morgan as well, moving to the top of its range, looking ready for a breakout. So the price action in financials is looking pretty good, and energy's coming back to life as well. A little bit of a dip down here in Tesla today, lower lows and lower highs coming off these extremely overbought levels. And Apple as well found new all-time highs today. But I'm continuing to hold a small short position in this stock for now. Small big moves in the meme space. We've got Big Bear up 11% today. Carvana up over 12%. A little bit of a pullback in SoFi after we had ripped really hard the last couple of weeks. Active today was Domino's Pizza up over 6% after we got an analyst upgrade. Oracle continues to rip to all-time highs after that positive earnings results a couple of days ago. Bit of a bounce back in United Health today after we got slammed down yesterday. And continued bounce back in Anheuser-Busch and Target shares as well. And overall, with the regional banks, even the most vulnerable ones, and including the biggest banks out there, they continue to hold above their 50-day VWAPs. And a quick look at our S&P 500 oscillator, still in overbought territory at 61.9. Okay, back to the main indices. And we've clearly gone into this melt-up mode. We can see this on the S&P 500 price action here. Just keeps pressing up and up. And the NASDAQ as well in melt-up mode. And I'll just take you to a weekly chart on the Qs. We're in the most overbought level we have been in a couple of years. And you can see that on our swing oscillator indicator at a huge 17.3 reading on the weekly chart. And you'd have to go back to just before COVID to get those same levels when we got really overbought going into early 2020. To see the same reading, so 8th consecutive winning week, it looks like if we close above 356 tomorrow, which we should, then this is the longest winning technical streak we've had in a couple of years. I still think we're close to a blow off top. It's hard to say exactly when it will occur. We do have that big rebalancing coming in tomorrow and the next couple of weeks, as all the big funds and portfolios out there will have to trim their stock exposure and increase their bond exposure because the yield differential has increased in favor of bonds. However, I did close my Microsoft short and took a small loss on it. And like I just said, I took off my Coinbase short after hours on the back of that news of partnering with BlackRock, which caught me a little bit by surprise. But that's trading. It always keeps it interesting for you. It is the most challenging game in the world. And because of those moves today, I decreased my net short positioning down to 60% net short. And it's just really interesting to see how this all plays out. And like I said, I'll be watching that VIX 9-day to go above the VIX 30-day and see a bit of backwardation up front in the volatility term structure to kind of let me know we're near the inevitable correction that we're going to get after all this. But that AI hype is strong, so who knows how high we can go, and we'll just continue to play it day by day as we see it. Alright guys, that's it for today. Thanks very much for tuning in, and definitely make sure you come back to Click Capital channel tomorrow, as we've got that huge quadruple witching day, end of half year and quarterly rebalancing. No doubt it's going to be a huge day in the options market, and I'm looking forward to seeing what price action we get out of all that. Alright guys, see you then.